everyone from across the world from another expo. Here we are, and as the place is loud, Lucky, straight away to the point, and the stage is yours.
Thank you. Well, thank you for the welcome. That's brilliant. Now, ladies and gents, I hope you are magic. As you have no doubt heard, the Trading Pit Legends are in a huge conference, overseas. Now, that being said, I'm going to make sure that I can share my slides with you. Let me just get this off and racing. So I'm going to share my slides. I'm going to jump on the chat function. So you can chat to each other and you can also chat to me. And can I get a quick, oh, there we go. Yep, cameras are working. So I know the cameras are working. My microphone is working. I think the slides are working. Now, if that's the case, thank you, Western Australia. Even though I'm thousands of kilometers away, you guys are very fast on the mark to help me out with that one. Terry from Bris Vegas, fantastic. Guys and girls, can I tell you from the outset, we had an absolute blinder this afternoon on the NASDAQ. We're going to be talking about the NASDAQ tonight. We had a ball. Christine, how are you? Hope you're fantastic. There goes my wife, Vakito, had her biggest trading night this month. She's a very, very happy camper. I don't think she's going to be coming back and taking another trade. It was really, guys, really exciting to watch. I'll tell you what the most exciting thing, Anne, how are you? I hope you're brilliant. It was one of the most exciting things to watch. I've just got to clean a finger off my glasses. One of the most exciting things to watch was tonight, some of the newest traders in the live trading room absolutely belting their daily profit targets, like belting. And so it's actually kind of exciting, guys, to get someone coming in the LTR with 3 or 4, it'd be the 3 or 4 days experience or 3 or 4 years experience. It makes no difference. But then to have that person say, wow, the market did exactly what it was meant to, it went exactly where it was meant to go. Isn't this fantastic? Guys, it's been a really, really top session. So I'm going to take you through those trades. We're going to talk about what we did. As the NASDAQ today hit its all-time record high. So an all-time record high tonight. In fact, let me show you. The charts are running live here in the background. So I'll just grab the chart for you. So this is the NASDAQ, and we're literally trading, guys. That's the R5, guys. So there's only six resistance levels in the world. We're trading at R5. Guys, we're literally on the NASDAQ tonight. We're trading at over 2,362. 20,362. So these are the charts, guys. This is basically what we did today. We picked up a thunderous reversal. It was brilliant. Then we picked up a number of tiered reversals. As it was really quite good fun. Now, in saying that, guys, we're going to have a really good webinar tonight. I'm going to do my best to stick under 60 minutes, do as best as I possibly can. Guys, we're actually going to start running on one of these incredible topics tonight called trading psychology. Because one of the fastest ways that you're going to develop a great psychology around the art of trading, literally the fastest way you're going to develop, guys, the best sort of psychology around the art of trading is actually handing the responsibility to the market to generate your signals. Right? So we're going to be talking tonight about the theme that we've done. Literally, guys, this is webinar number 8. So we're already 8 webinars in. For all the webinars that we've done so far, we've always spoken about you've got to let the market do the heavy lifting. Make sure the market generates a signal for you. Make sure the market tells you exactly where to put your stop loss, exactly where to put your target, how long you're going to hold the trade for. Because all of that information we can actually generate off the trading charts. So ultimately, if you have a winning trade, it's the market's fault. If you have a losing trade, it's also the market's fault. So what we're going to be doing tonight, we're going to be talking about depersonalizing our trading, as making sure we hand the responsibility of the trades over to the market. As the reason being is we want to get away from the emotions of trading, as the fear and greed. We want to get away from the fear and greed of trading, and we actually want to get on with the job of trading as mechanically and as robotically as possible, which is really brilliant. So that being said, guys and girls, do a quick round the world. It's pretty obvious we've got lots of... exactly right. Psychology, guys, psychology of trading. It's a really interesting topic. There's some really incredible books out there on the subject. At the end of the day, guys, as we're going to discuss in our slides tonight, at the end of the day, the fastest way to generate a great psychology around trading is take winning trades. You're probably thinking, well, Lockie, that sounds pretty straightforward. How do I take a winning trade? Well, the way to take a winning trade is to let the market generate the signal for you, guys. And we've got some rules and conditions around that. Sure, we can talk about that tonight as well. So I'd love to find out, ladies and gents, every time we do this webinar, we are truly international. There is no question about that. Now, it looks like tonight we're very heavily skewed into Asia. I'm not kidding. We've got Singapore online. I'm in Japan tonight. We've got a lot of Australia online today. So there's a lot of Australians. Now we may, guys, looking at the numbers are growing quickly again. So I would love to find out, guys, who in the world is the furthest away from Japan. Now, Australia, you're doing pretty well, but if we've got a couple of Europeans, guys, Surit, how are you? You're from Perth. Okay, so mate, you're a long way from Japan. There's a lot of you in Perth today. Paul, you are in Tasmania, so you're further away than everyone else in Australia, so to speak. Someone would argue Tasmania is not Australia. It's even better. Yeah, Tassie's brilliant. We've got Suzanne. You can pretend you're back in Sweden. That's brilliant, guys. I have actually seen some of our previous recordings on the Trading Pit YouTube channel. So again, great reminder, if you haven't seen the previous videos, please do look them up. But some of those videos are being viewed from all over the world. So it's really, really exciting, guys. Even our American traders are picking up on the videos now, which is brilliant. Now, that said, guys and girls, we're going to get on with it. Today is part 8 in our series. So part 8 is this week. Part 9, guys, we're going to be doing next week. Guys, today we're going to be talking about psychology development part 1. Wow. With Zimbabwe. I was about to say we've got traders in from Zimbabwe. So hello, Zimbabwe. I hope you're amazing. Guys, is that further away from Japan? I'm just trying to think on the map. That's a long way from Japan. I'm in Japan, as you know, in the mountains outside Osaka. So welcome, South Africa. Isn't that exciting? So guys, tonight, part 8, number 8, we're doing psychology development part 1. Next week we'll actually do part 2. Guys, so what we're going to be doing tonight is we're going to talk about how to tailor your thinking to produce a great psychology around trading. Now, the reason, thank you, Walter, 13,000 kilometers from Brisbane. There you go. There's your answer. Guys, the reason I say that is that markets move up and down every day. Okay, the markets move up and down every day. Now, the beauty of that, the markets that we specialize in trading, so we are literally futures traders. Lou, how are you? Guys and girls, because we are futures traders, we don't have brokers on the other side of the market trying to trade the market against us. So what does it mean? It actually means that we've got a significant advantage over almost every other trading discipline in the world. Futures traders is basically a 2-team game. So the buyers versus sellers, and the stronger team has to win. Guys, whereas if we were to compare, for example, Forex as an example, Mandy, how are you? So Forex as an example, you've got the buyers versus the sellers versus the broker, and the broker controls the direction the market is moving. So when people say to me, Lockie, is Forex trading the same as futures trading? I say, no. I stopped Forex trading in 2007 when I discovered futures trading because of that one thing. So as a Forex trader, it's a 3-team game. So buyers versus sellers, and the stronger team has to win. The problem with Forex is you've got the broker in the middle mucking around with the price of the market, literally pushing the market up and down as they choose. So we are futures traders. And the reason I want to raise that really, really early on in the session is it's very easy for us, guys, as futures traders, understanding that the futures trading market cannot be manipulated by anybody, particularly brokers, because there aren't any brokers in the futures trading game, like full stop, there are none. Guys, we can, as futures traders, develop a very, very powerful psychology around the market and how it moves. We have a significant advantage over everybody else because we trade in a market that is literally prevents all kind of market manipulation. So there's no such thing as every time I take a trade, the market goes against me. Guys, now, if a futures trade is experiencing that kind of stuff, that means they're simply not reading the market well, and we can fix that very easily, guys, as we've done in the previous sort of 7 or so webinars. So as futures traders, we have a very, very distinct advantage over the market when it comes to the development of a positive psychology, because at the end of the day, the market cannot be manipulated against us deliberately. You know, the beauty of it, guys, I took a couple of trades today. They've gone very, very well. Lakito had an absolute blinder. So for those that weren't here at the start of the webinar, as my wife had one of the most profitable trading days she's had this year. I can show you exactly what she did and why she made so much money. Guys, but the beauty of that is that we made so much money today, guys, because the market cannot be manipulated against us when we trade. Okay, so we can use this as a very, very solid foundation in order to build a great psychology around trading. So this is what we're going to be talking about today. So guys, my target learnings, if there was such a thing as a target learning, we're going to talk about why a small KPI is really, really important. So your goal might be, let's say 100, 200, maybe 300 US dollars per day. Why it's really, really important to stick to that KPI. Guys, why is the simplicity of what we do so important? Again, why is a market design so important? So the design of the futures market versus everybody else. Guys, and basically, why should we let the market do the heavy lifting? So in the webinar tonight, I'm going to do my best to explain all of those. Guys, now understanding we do link back to all of the webinars that we've already done previously. As tonight, we're going to target very, very quickly on KPIs. We're going to focus primarily on simplicity. The reason we're going to focus on simplicity, ladies and gents, as per the webinar I did last night, guys, on how to write a great trading plan for those that are members of Doro, is the reason we're going to focus on simplicity is if your trading strategy is very, very simple to understand and very, very simple to execute, you'll find that it's far easier to develop a great psychology around simplicity. As it's the opposite if you're going to try and get a very, very complex trading strategy where you're analyzing 200 different markets trying to find the best one. Well, in our case, we analyze 2 markets and we find the best one. Okay, so it's very, very easy with only 2 markets up for grabs. It's very easy to find the best signal, as we've done today on the NASDAQ. In fact, guys, for those that were in the live trading room tonight, we picked up to 6 trades on the NASDAQ and every one of them went to profit. So 6 from 6. That's 100% strike rate again. So anyone out there in the world that says you can't get 6 trades right from 6 trades, well, we did it again tonight. So we appreciate the compliments. It's actually quite good fun. And I'll show you what those trades were tonight, just so everyone's got transparency of exactly what we did and why we did it. And as you can imagine, guys, the live trading room team today are very, very happy with their results. And some of the trades were massive today. So I'll show you what everybody did. Now, in saying that, guys, we are going to be talking about psychology tonight. Psychology is a mind game. There is no doubt about that. The most important thing, though, you will take away from the webinar tonight, no doubt, guys, once we go through the charts, is the simpler you make your charts, okay, the less indicators you have on your charts, the simpler you make your charts, the more money you're going to make, because if your charts are not covered up by all these silly little things like moving averages, guys, I'm amazed at some of the people putting moving averages all over their charts. And when I asked them, what has that moving average got to do with the trade that you just took on the chart? They're like, oh, no. I just like to see when the market does this or when the market does that. And I say to them, if you're not using that moving average to actually execute or control the risk on a trade, I'd actually take it off your chart because it's confusing. It's confusing what you're looking at. Paul, how are you? I've never heard of a guppy MMA. That's mixed martial arts, isn't it? Is that cage fighting? I'm not sure. I'm sure, guys. I'm sure there's some wonderful indicators out there in the world. But may I suggest the most powerful indicators in the world are the pure price movement of the market. And of course, as a futures trader, everybody sees the same thing at the same time. Exactly right, Jeff. Now, guys and girls, we are across multiple jurisdictions today. Obviously, we're into Australia. We're represented tonight in Sweden. We've got South Africa. We've got Asia. No doubt there'll be Americans watching the webinar, guys, as they always do a little bit later on in the day, guys, when it's hosted on YouTube. So, guys, I do need to run through 3 customer caution notices. First thing we do need to mention is that futures trading, guys, and also CFD trading, for those that are trading CFDs, guys, what we've got to understand is there's risk in trading both of those instruments. Now, in saying that, the risk is accelerated by the use of margin. So what does that mean? We borrow money every time we take a trade. What does that mean? We can make money very quickly. We also lose it very quickly. As a result, we want to make sure that we are professional risk controllers, and that's all that we ever do, guys, in the game of trading. Okay, good evening. How are you? Hope you're brilliant. Guys, the last customer caution notice I do have to mention is that the information tonight is general information only. Also, that the past performance of the product, guys, can't be used as an indication for future performance. Now, in saying that, guys and girls, my history very, very quickly, I got invited, guys. I got invited at the end of 2023 to be the CTO or Chief Trading Officer at Doro. Guys, my role at the moment, I'm the lead educator, lead moderator, and also the lead trading coach. I have been trading, guys, for a significant period of time. So I took up futures trading in August 2007, guys, when I literally started taking leave from the Army. I did the Army for 15 years before that. The really exciting thing is I discovered futures trading, realized that it was a really, really exciting avenue. Effectively, it's gone from there, guys. It's gone from there. So I've got experience in CFD trading, options trading, Forex trading. Guys, I've written books. I've done all that kind of stuff. At the end of the day, I'm a professional futures trader, have done it for a very long time, and it's going very, very well. Now, a bit of a timeline for those people that want to try and put all of that together. August 2007, literally 1 August 2007, discovered futures trading. On the 1st of August 2009, I launched my first trading school, guys, in Australia based on the strategies I developed. Why did I launch a trading school, guys? Literally after around 2 years of trading, I literally realized that there were basically no decent trading schools in Australia. Now, not to be rude, but the vast majority of people were teaching mums and dads, so normal everyday people, how to trade Forex. Now, I had a really big concern about that because Forex is one of the most manipulated, openly, happily manipulated markets in the world. And I was really concerned that a lot of people were buying Forex education, guys, and they were just getting slammed. And what that meant is a lot of these people were giving up on the game of trading because they thought Forex and futures trading is the same thing. It could not be further apart, guys. We're talking apples versus oranges. So I thought, you know what, I'll open a trading school and I'm basically going to teach normal people like mums and dads how to actually be a bank. Okay, as it turns out, we're here today. Guys, 2024, it's been absolutely phenomenal. Guys, at the end of 2023, I got the opportunity to move to Japan, based out of Singapore, which I'm now doing, guys. And I live in Japan with 3 little children, bloody hilarious, and my wife, Akito, who's Japanese. And guys and girls, we're having a great time. We're having a really, really good time. I did get to meet the 45th president, guys. He was really good fun. I do think he'll be the 47th president, the way it's all going. Suffice to say, guys, I'm very, very excited about what's happening geopolitically. What does it mean? The markets are getting driven up and down. I think it's going to get faster and faster this year, guys. Literally, as we get closer to the US election, I think it will get faster and faster. And guys and girls, at the end of the day, we love volatility. You know, it doesn't matter if it goes up, doesn't matter if it goes down. For those that have not been in one of these webinars before, our average trade is around 7 to 15 minutes from start to finish. So we can fit a lot of trades in a 24-hour basis. And that gives us a distinct advantage, guys, over the markets when it's volatile like it was this afternoon, like I'll show you on the charts. Now, guys and girls, in saying that, what we're going to do is I am going to reflect back on the European Open today. Now, I can show you the FDAX if you want me to show you the FDAX as well. Because the only catch with the FDAX is that it's on contract rollover today. So literally today is the day it rolls over from its June contract to its September contract. So the signals were still working. They were still quite good, but the volume is right down. So I don't want to teach you how to trade a market on contract rollover. That probably wouldn't be that smart. Guys, in saying that, though, we will stick to the beginner trading, guys, or beginner and intermediate trades, because you guys have already been through a webinar series of 8 webinars. So you'll start to see, guys, the power not only of the live trading room, but also the power of the signals that we're taking. Now, flip side, guys, very exciting news that as at the 1st of July, we will be opening, guys, again, the technology angel kisses us perfectly, as we are opening the US pre-market, US Open live trading room, and also the US closed live trading room, guys, will all be opening on the 1st of July. So there's going to be 3 trading sessions available, guys, European Open, US closed. Basically, they are the best trading sessions in the world, and we're going to have a moderator calling the signals for you in every one of those sessions, guys, from the 1st of July. So should be a very exciting second half of the year, guys and girls. It's going to be incredible. Now, let's talk about trading psychology. Guys, the reason I want to do trading psychology is it is the foundation of everything we do as professional traders. So a couple of quotes, guys, The fastest way to develop a stunning psychology around the art of trading is to take back-to-back winning trades and to do so consistently over a long period. But guys, if I can reflect back, you can read as many trading psychology books as you want to, but at the end of the day, when you log into the markets, if you're taking losing trades, it doesn't matter how many books you read, you will never develop a positive psychology around trading. So books are a really, really good spot to start, guys. There's no question. But at the end of the day, you've got to be executing winning trades. What does that mean? You've got to have a simple trading plan that you understand. You've got to select your market well. And you've got to make sure it can't be manipulated. That's really, really important. My second quote there, the fastest way to erode your trading psychology is to take back-to-back losing trades because you have added untested opinions. I'll just pause there for a moment. Because you've added, I should say, untested opinions or untested variables or untested indicators to an already proven algorithm. Now, the algorithm, guys, that we're going to be talking about tonight is an efficiency dominance style of algorithm. The actual foundation, guys, of what we do is called negative histogram divergence. Long story short, NHD, as it's known in the trading game, guys, has been around for a very, very long time. It is a tried and tested way of trading the market. You'll note that my charts, I'll show you my charts here. Guys, my charts are very, very simple. Okay, I'll just go full screen for a moment. My charts are very, very simple. Effectively, I've got a number of indicators there, guys, primarily the pivot indicators, and I've got a trend indicator we use effectively for long-range targets. So all of these are pivots, guys. These are literally just straight pivots. Down the bottom is volume. Very, very simple stuff. I'll take you through this a little bit later on. But guys, I would suggest that if you're going to trade really, really well, this is about as complex as your indicators are going to get. It's literally as complex as you're going to get. The only complexity we've got, guys, we've got the little delta indicator running on the screens here. The delta was an absolute no-brainer today. It was incredible. The delta is an indicator that tells us where the institutional traders are entering the market. So we can basically copy the banks if we choose. Okay, but I'll talk about that. I'll talk about that a little bit later on. Now, the third quote down the bottom there, guys, success leaves clues, but so does failure. And sometimes the more painful clues end up being the more valuable in the journey to being a great trader. So if you've been around the trading game for a little while, guys, it may have gone very, very well for you. It may not have gone well for you. Either way, that's fine. It's not difficult to fix. Guys, if you've been around trading for a while and it's not working for you, all you've got to do is simplify your trading plan down to something which is really, really obvious. The more simple your actual trading plan becomes, guys, the easier it is you'll execute it. The faster you'll build up a positive psychology around it. You move to consistent profitability, guys, and this webinar could end up being one of the most valuable webinars you've ever attended. Now, guys, how do we develop our trading psychology? Sounds like me, Cole. It's easy to fix. Now, guys, what we're going to do, guys, to fix this, we need to focus. Guys, we need to focus on basically what does work, but we also got to be very, very careful we don't focus on what doesn't work. So in saying that, guys, to develop a great psychology in the game of trading, we must focus on what is already working. I don't want to sound rude. Guys, we did get 6 trades on the NASDAQ today, and every one of them went to profit. So what that means is for some of you watching the webinar tonight, guys, you may have to focus on what is already working, and you must be prepared to walk away from everything that isn't working. Now, quite often, guys, I get some really, really awesome discussions. People say, Lockie, what do you think of a MACD indicator? Or what do you think of an RSI indicator? Or what do you think of Bollinger Bands? Or what do you think of this? Or what do you think of that? Or la, 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 la. There's parabolic SARs. There's heaps of them. Now, in summary, and I'm not going to be rude on this one, but if a MACD was to increase our profitability, we'd have one on our charts. If a stochastic was to do the same, we'd have one on our charts. If an RSI was to improve our performance, guys and girls, we'd have one on our charts. But the beauty of being a 5-minute futures trader is we don't need any of that additional stuff, guys. We don't need a lot of that detail. One of the reasons we don't need, Andrew's still in a short trade, well done. The reason we don't need all of that detail, guys, like, for example, an RSI or a stochastic or a MACD or this or that, the reason we don't need that is because none of that was actually designed for what we do, which is 5-minute chart futures trading. None of that was designed for what we do. So what it ultimately means is we can actually design things specific for what we do, which we've already done, and then we get on with the job of making sure that we just focus on what works. Oh, so if your charts are more complicated than mine, guys, may I suggest that unless unless you're trading better than we are, which is I'd be so excited if you are, guys. But if you're trading a little bit worse than what we are, what we need to do is we need to focus on what's already working and build a really positive psychology around that, which I do think personally is actually really quite exciting prospect. Now, guys, what we're doing is, so the question you do need to ask everybody, guys, regardless of where you are in the world, guys, is what you are currently doing working really well? Because if what you're doing is currently working really well, guys, like Louis tonight in the live trading room took around about 140 ticks off the NASDAQ. If what Louis is doing really, really well, Louis might actually be with us tonight. But guys, if Louis nailed it tonight, Akito nailed it tonight, every trader that took the signals called in the live trading room, if it met their trading plan, nailed it tonight. So the question being is, if we've nailed the market tonight and you haven't, then maybe there's something really, really cool we can teach you about how to read the markets, which will be kind of good fun. Now, guys, what does it mean? What does it mean is that some way, I'd say not being rude, but some days there's the right way to read the market and there's a wrong way to read the market. And we need to try and make sure we get on the right side of that every day. Now, to give you a tip, guys, I'd suggest that means most of you are going to end up being ratio and efficiency-based traders. All right, so I can talk about that as we get into the charts. Now, guys, as I move through this very, very quickly, I want to talk about KPIs, but we're only going to touch on it really quick. Guys, I want to talk about why KPIs are so important. Why is this simplicity so important? Why is market design so important? And why should we let the market do the heavy lifting? Guys, what this means is we let the market gift us the signal, and then we simply go and take advantage of that particular signal. So KPIs. Guys, the reason they're super important, your KPIs give you a yardstick you can use to navigate your way through trading. Trading is not a get-rich-quick scheme. It's a get wealthy slowly and learn how to keep it scheme. So that means that for those of you that are doing what we do already, guys, you're going to be following the 24-20 plan. Okay, what does that ultimately mean? You're going to go for 20 ticks a day on the NASDAQ, which is around about $100 US. You're going to try and do that 4 days a week, and you're going to slowly work your way up to 20 contracts. Okay, 20 contract traders. You're really, really moving forward, guys and girls, on 20 contracts. We do have a couple of traders, guys, in the live trading room currently on 60 contracts. So there are much bigger traders than this. However, guys and girls, if you follow the 24-20 plan, so that's 20 ticks a day, 4 days a week, and slowly work you up to 20 contracts, you will earn around about $250,000 a year. And you'll be trading for about an hour per day. So that's an hour per day to earn $250,000 per year. We've done all these figures, guys, in the previous webinars. Reality is today you could have smashed 20 ticks. So I'll show you when we get into the live charts. Guys, why is simplicity so important? Simplicity is very, very important because it's your key to success in trading. Guys, what does that mean? I'd love you to follow the 1-1-1-1 principle. What does that mean? You're going to focus on one market only, like the NASDAQ. You're going to focus on one signal only, like efficiency or ratios. You're going to trade one time slot only, like the European Open, guys, and you're going to basically use one target, which when you first start will be around about the 20 tick mark, which is your daily KPI. So the 1-1-1-1 principle simply means follow one market, trade one signal, use one time slot, and basically go for one target. The moment you achieve that target, time to disappear and go and do something else. Now, guys, I put that little Excel reminder down the bottom left-hand corner. The reason being is there are videos not only on the Doro Day Trading YouTube channel that show you exactly what the 24-20 plan means, guys, over the next 3 to 4 years. Guys, if you want to take advantage of those, awesome. There's also a previous webinar we did, as I believe webinar number 2, webinar number 2 for the Trading Pit, guys, was actually all about KPIs. That's also on YouTube, guys, on both the Trading Pit YouTube channel and the Doro Day Trading YouTube channel. Guys, it would fascinate those people that haven't been to this webinar series, probably very fascinating to jump on that webinar, guys, and have a look. Now, number 3, guys, let me move my little camera around here. Market design, guys, greenhouse versus red house. Again, there's more videos on YouTube about that, so make sure you search greenhouse versus red house. Guys, at the end of the day, as a futures trader, there is no OTC broker that's OTC stands for over-the-counter broker, like a Forex broker or a CFD broker or a stock broker or an options broker or a binary options broker, even worse. As a futures trader, there's no OTC broker on the other side of the market who can deliberately trade the market against you every time you take a trade. Okay, now, What does that mean? It's a lot easier to build a psychology, a really good psychology around trading, guys, if you know the market you're trading can't be manipulated against you. Now, I've mentioned that before, but may I suggest, guys, some of the best Forex traders in the world have failed because their broker traded against them, not because they're bad traders. And an interesting point, you can trade all of the major Forex currency pairs, guys, like the Great British Pound, the Aussie dollar, the US versus the euro and similar. You can trade the 8 major, in fact, some of you might not be aware of this, because you can actually trade the 8 major Forex currency pairs around the world. You can actually trade them using futures contracts without a Forex broker. So you can be a Forex trader, but just use the futures contracts so nobody can trade the market against you. That could be a very exciting plan. Now, that being said, one of my favorite markets to trade when I first started futures was what we call the 6E contract, or it's the euro versus the US dollar. Absolutely incredible market to trade. Now, guys, point number 4, let the market come to you. What we're going to be doing to develop a great psychology, we let the market create this signal for you and simply follow the market's lead. So that's what we mean, let the market do the heavy lifting. We want to mechanize our trading with the intent of becoming as unemotional as possible. Now, some days, guys, the market does annoy you, and that's okay. Today, as a great example, the market was incredible to trade. Okay, incredible to trade. So I'll show you when we get into the live charts. Now, guys, your KPI development. Okay, I want everybody, please, as we read through this slide, please don't lose sight of the fact that 20 ticks a day, so that's $100 a day from the NASDAQ, can change your life forever. Now, a question for everyone watching the webinar, has anyone ever taken a really, really good trade, made some really, really good money, and then gone and taken another trade and given it all back? And then asked the question, why did I just go and take a second trade and give all of my money back when I was already over my daily goal? Now, of course, no one in the webinar would have ever done that. Just no. Of course, we're all we're all trading gods, right? We've never done. I've done it, guys. I've done it before, and I've actually recorded videos. I put them on YouTube. You know, literally, why did I do that? That's ridiculous. So, guys, what I want to do, these points here, many traders lose sight of their own potential as they focus on the short term rather than the long term. Okay, many traders put an artificial expectation on themselves and their experience and the markets, guys, when they set off on their trading journey. Now, many traders, guys, when I say put an artificial expectation on the market, quite often they put an artificial expectation on the target the market is going to achieve. Now, let me show you something here, because this is all done for a reason. So up here in the top left-hand corner, is our, see, TGT, guys, is the military acronym for target. So this indicator here is telling us exactly what target we should be using every time the candle closes on the 5-minute chart, which is this one behind you here. The target indicator resets to tell us what we should be doing. Now, guys, when we picked up this incredible signal here, which we're going to talk about when we come into the charts, guys, the target indicator said go for 58 ticks per contract. So go for 58 ticks, which is 58 times $5. That's around $290. So go for $290 if you're a beginner trader. If you're a senior trader, go for slightly more than that. If you're a really experienced trader, go for even more than that. Guys, so a lot of traders took this signal this afternoon, guys, and set targets of up to $400. A number of traders, guys, are still short on the sell signal we got from earlier today. So, as understanding that to be the case, you can have indicators on your charts that tell you what to do, like that target indicator in the top left-hand corner. Okay, so when we come back into the charts, I'll talk about that and how to pull it apart. Now, building on this further, guys, many new traders. So many new traders set a great KPI. So let's say $100 per day. They tested, improved their capability, and then they changed their plan in the heat of the battle. Has anyone ever grabbed their profit target when the market starts running towards your profit target, grab the profit target and moved it down the screen or up the screen in order to try and get more money out of the market? It goes down, goes through your normal profit target, then goes back and stops you out. You're thinking, why did I do that? How to move the stop loss to break even? I'm brand new. Absolutely. So very hard to show you how to move a stop loss to break even without having a stop loss on the screen. Okay, let me do. let me show you over here, mate, on this particular signal. So we went short here, guys. Let me blow it up for you. Okay, let me blow it up for. Oops, that's not what I wanted. Okay, I'll make the chart a little bit fatter. Do one in Sim. Do one in Sim. Let me double check my charts are in Sim before I put anything on the screen. Hold on 1 second. I have made the mistake, guys. I have made the mistake. Let me just double check global simulation mode. Yep. Okay. I have made the mistake, guys, of taking a trade. I've just done that. I've just done that. All right. So, guys, let's okay. So we're going to buy. So I'm going to buy the market. Okay, perfect. All right. So we're going to buy the market. Now, this is not a signal, guys. Not a signal, but the question has been asked. How do I move my stop loss? All right. So we bought the market. We bought the market. And guys, what I've got here is the green thing is my target. So all I do is I click on it and I can move it up the screen and I can also move it down the screen. And I've got my stop loss here. I just simply click on it. I move it up the screen or I move it down the screen. So how do I move my stop loss to break even? Let's say I was in a valid trade at this point in time. Let's say I was in a valid trade. And let's say the market starts moving up to the top of the arrow. So it literally starts moving towards my profit target. Then my stop loss, I can literally grab the stop loss and I can move it up to exactly where I got in. And that means my trade has no risk. That's mean my trade's got no risk. So the whole idea behind that, guys, we'll just let that bop along for a moment. The whole idea behind that is, okay, the delta trade we got into tonight, which is in this little circle. Let me get rid of this information over here. What we did, guys, is we picked up this little delta here, that little delta right there. That's that little line across the screen there. Okay, so we picked up the delta and we went short. Now our stop loss was originally sitting behind this candle. Let me just move my little arrows around. Okay, I'm just going to let this little buying campaign, guys, pop along. Because the question was, how do I move my stop loss to break even? See, these guys are moving here. I can now click, move my stop to there, and that means I can't lose any money on the trade because we're trading back into a pivot. I'm going to bring my target down and put it there, which is 4 ticks before the pivot. And I dare you to go and touch the green line versus the red line. So the question was, how do I, oh, thank you very much. How do I move my stop loss to break even? That's how you do it. Okay, literally click, move the red line up, and you're off and racing. Now that does, guys, it does raise a really, really good little point. Okay, so we got this delta over here. I'm going to spend a little bit of time on this. But again, because the question's been asked, our stop loss for that particular trade was sitting just here. Okay, so just here under the red signal. Now, the moment the market started to move in our favor and the little green candle closed, we can move our stop loss down. Then the red candle took off. We can actually start to move our stop loss further and further and further and further down, depending on what our trailing stop strategy is. Now, most of the traders, guys, today went short on the delta and ran it down to that pivot and got out. Now, that's only about a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So it's a 40 tick target. It's a 40 tick target or a $200 US target. Those people that were going to hold on to the trade for longer actually traded all the way down here to this little yellow circle, which actually ended up being a $400 US target. So really, really lovely target. And all they had to do literally is just sit there and do nothing, which is kind of good fun. But we're going to come back, guys. We're going to come back on in a second and nail that one. So I hope that answers the question. That was a great question, T from Zimbabwe. Great question indeed. That's all you do. So you literally click and you move it up. In that case there, what we did is we bought the market. As the market started to move towards our profit target, we clicked on our stop loss. We moved it to above where we got in, so we can't lose any money on the trade, and we just let it continue through to the profit target. That's a great question indeed. Whereas now many new traders, the fourth point down here, many new traders compare themselves to more experienced traders and get disappointed when they don't make $50,000 US in their first week of trading. Guys, this comes back to your KPI. Your KPI is $100 US per day when you first start, guys, and then we slowly increase your KPI over time. Guys, that's what I did with one of our biggest traders now, who's sitting well over 50 contracts. He started on one contract and his goal was $50 per day. Guys, now his goal is thousands and thousands of dollars per day. But he didn't do that in his first week of trading. Okay, now, as many traders also forget to assume the marathon principle. What is the marathon principle? Guys, you may be running in a large pack, so that's the live trading room, sure. But at the end of the day, you must run your own race. And that means you've got to run at your own pace and you make sure you and you only make it to the finish line. Because that's why in the game of trading, if you want to build a great psychology around trading, not only do you need KPIs, but you've got to make sure you don't make the mistake of actually comparing what you're doing to other people that have years more experience. Instead, what you could do is grab those people that have years and years and years more experience than you and say, hey, what is the best way to trade the market? That's probably a smarter question, because if they're years and years and years in front of you, and most importantly, unlike Forex brokers, they don't make any money out of you when you trade, they're highly likely to show you what they do and show you properly. Okay, so there's an interesting little lesson. Now, guys, next slide. Let me build through this one for you here. So the principles, guys, we've spoken about so far. Please remember the principles we've spoken about so far in the trading plan development side of what we do. So, guys, in the webinar series, we have spoken about KPIs. We've spoken about the ABC stair steps. We've spoken about ratios. Now, I guarantee that the vast majority of you will end up as ratio efficiency-based traders. Guys, we spoke about 3 steps and a stumble. We spoke about the magic numbers of each of the markets. We've spoken about the market turning on the hour. We've spoken about trade for the first 45 minutes of the hour, then stop trading. And we've spoken about one of the most incredible signal sequences that I think exist out there, which is a reversal trade followed by a bias, followed by a continuation trade. So we've actually covered a huge amount, guys, a huge amount in this webinar series so far. But I do want to take it, guys, I do want to take it a little bit further. We're going to go into the live charts. Now, when we go into the live charts, which are right here, okay, so this is what we were literally just talking about a second ago. Here are the live charts, and I want to actually walk through as almost like a proof of concept, right? What we've done in the 8 previous webinars, and then what you could have done today. Let me just go to some of the detail on the charts. What you could have actually done today in order to work towards building a really, really positive trading psychology. So how could you have effectively done that? Let me get rid of some of this stuff. Okay, now first things first, guys, we've got brand new people in the webinar, guys. As it turns out, we've got more people in this webinar, guys, than we've had in any other webinar. So clearly the word is spreading, which is very exciting. Let me take you through a quick familiarization. That's what I know it's not guaranteed, but what is the recommended lot size relative to my deposit? That's a great question, T. I would suggest that when you first start trading, I wouldn't risk more than 2.5% of your trading account on any one particular trade. That's why the vast majority of my professional traders, T, are funded. So they're literally funded at, say, the $150,000 mark or the $200,000 mark or the $250,000. What that means is it's very, very easy for them on 1 or 2 contracts, like, for example, on the NASDAQ today. I'll use that as an example, mate, if you want. Very, very easy for them to hold a very, very responsible risk profile. Okay, so very, very easy for them to do very, very well. Okay, Cole, reversal off the R5. Okay, 45. Okay, yeah, you could have used the static bar reversal, this one right here. You could have used that one and waited for the risk to be reduced if you wanted to, but that's okay. That's all right. Oh, Cole, in saying that though, just a great point, a great question. Just be aware that the only trade that we move away from the rule of don't trade the last 15 minutes, right? The only trade that we're allowed to trade in the last 15 minutes of the hour is a pivot-based reversal. So NASDAQ and FDAX exactly the same thing. So, man, it's a great point you raised. The flip side being is if it's a pivot-based reversal, which is, I'm not being rude, right in front of us, if it's a pivot-based reversal, you're allowed to go into that last 15 minutes. Oh, man, it's great, guys. Because Cole's just said, oh, my God, light bulb moment. There'll be some of you out there that went, oh, wow, I didn't know that. So, guys, that's really, really quite important. Okay, now, guys, let's break it down. Let's break it down a little bit. We're going to focus on the most obvious trades, guys, the most obvious trades. Let me get my arrow out of the way. These little circles out of the way. Now, a really, really quick chart familiarization, guys, for those that don't know what we're looking at. So again, this is the NASDAQ. So this is one of the most popular indexes in the world. Turns over hundreds and hundreds and hundreds and hundreds of billions of dollars a day. Guys, hundreds of billions. Now, what are we looking at? We're looking at the NASDAQ, which is a US stock market. We're looking at a 5-minute chart. What does that mean? Every time we count down, so this little countdown timer over here on the right-hand side, every time that counts down to 0, we start getting a new candle. And effectively what we do, guys and girls, as 5-minute chart traders, is we diagnose what the market is telling us by the size and the strength of the candle. And then we basically join the sellers, or we join the buyers, or we do nothing. Now, understanding there are only 2 teams, buyers versus sellers, and the stronger team has to win. All we want to do ultimately is identify the team that's failing and join the other team. Now, please hear that, guys, because there's a lot of people out there in the trading world who say, I've got to join the team that's stronger. Okay, as futures traders, we identify the team that is failing and we join the other team. Mind you, that mentality of identify the team that's failing and join the other team is primarily because there are only 2 teams. Full stop, buyers versus sellers. So T from Zimbabwe, when you asked that question before about what lot size do you use, that means we don't trade lots, we trade contracts. So that means you're coming to us from a Forex background. So have you done some research into Forex trading? Because Forex trading, guys, generally they trade in lots. Now, for those of you who are not Forex traders, you might not know that. But that says to me, T, you've done some research into Forex trading. Just be really careful with Forex, and it is one of the most manipulated markets in the world. I mean, I've written, does everyone know that I've got an international bestseller and it talks about market manipulation? So so annoyed am I at that whole model that I decided to write a book on it, which is actually kind of good fun. So guys, over here on the right-hand side, sorry to get on my soapbox, over there on the right-hand side, guys, you've got the price scale of the market, so everybody can see what price the market is. All this stuff down the bottom goes right across the bottom, all these little spikes are volume in the market. This little trend indicator, guys, when it's green, the market's generally going to go up. When it's red, it's going to go down. When it's gray, the market doesn't know what it's doing. So when it's gray, basically, guys, the market has no direction. If it has no direction, then ultimately you have no direction. And then these big horizontal lines, guys, the big bold lines running across the screen are pivots. Now, how do we know the pivots are correct? Well, I got a great question off the back of last week's, guys, 2 weeks ago webinar. They said, how do you know your pivots are correct? Because the market went down, bounced off the pivot and went back the other way. How do you know your pivots are correct? Because the market failed at this one, turned around and went back the other way. How do you know your pivots are correct? Because it came down, touched the pivot, turned around and went back the other way. Now that question, guys, interesting. That question came from somebody whose pivots were in a different spot. And this could raise, guys, we've got 50 people on the webinar. This could raise a very, very interesting point. If you are trading Forex, the price of the market is defined by your broker. What does that mean? The price of your pivots is also defined by your broker. So what happens if your broker gets the pivot price wrong? Well, that means you're trying to reverse off areas in the market that don't exist. What does that mean? Your reversal trades are not going to work. Now, at this point in time, guys, we've just set up, right now it's live. You can't hide from this. This is a live NASDAQ chart. Can everybody see that we've actually set up right there? That little thing says SBR, static bar reversal short off the R4 pivot. What does that mean, guys? It means that our pivots are very accurate. So the market has come up here, reversed off the R4. It came down here, reversed off the R3. Earlier today, it reversed off the R5. What does that mean, guys? What does that mean? Again, talk about trusting your markets. Talk about developing a psychology around the markets. If you know the market is likely to fail at a pivot, and you also know your pivots are in exactly the same spot as all the major hedge funds around the world, what it means is you can trust your pivots to generate reversals. So why would I say, guys, trust your pivots in order to generate reversals? The reason I'm saying that is the day we took a number of pivot-based reversal trades, and every one of those trades went to profit. So if you can trust the data, guys, if you can trust the price of your market because you are a futures trader, you can trust your pivots. If you can trust your pivots, you can write a strategy that reverses off those pivots, which we have done for you. What does that mean? You can develop a very, very powerful, guys, and positive psychology around trading because you are taking back-to-back-to-back winning trades. So literally back to the start of the entire conversation. Why is it so important, guys, that we want to build back-to-back-to-back winning trades? Because that is the fastest way to build a trading psychology. So let's say, for example, guys, because we just happen to have this on the screen. Let's say because the volatility is quite low. So guys, have a look at the top left-hand corner. All right, let me move this arrow around for you. Top left-hand corner. Okay, the volatility is really low at the moment, guys. So it's basically saying if you're a new trader, your target is half of the top number. So basically half of 30 is 15. Because if we look at the chart right now and we put a 15 tick box on the chart for you, which is a suggested target, 1, 2, 3, your target's that big. If we then grab that little box and we put it down here, guys, underneath that little signal candle that's happened live, so your entry is just underneath that candle, your stop loss goes above the candle. The candle's even labeled for you, guys, to say, please take this trade. And what's occurred is it's dropped through your profit target. Now, interesting point, it dropped through your profit target. That is a pivot-based reversal that's occurring live on the chart in front of you. This is a pivot-based reversal, guys, that occurred literally as we got ready to start running the webinar. Walter, very good. That was a good SBR for +10, +20. Exactly right. So guys, what are we doing? So I love talking about live charts. All right. Now, the reason I say that, for those that may not have seen one of my webinars before, I never ever present off a dead chart. So a dead chart, anyone can do that. So we could go back 10 years to a Bitcoin chart and buy it at $1 if we want to. Anyone can do that. But the reason I present off a live chart, is I want to make sure, guys, that you guys not only can see the power of an indicator, but you understand why the indicator is working. So that's basically what we got there, that little -4, that's a -4 rated static bar reversal off a pivot. And everyone in the world that trades futures knows that pivot's there. What does that mean? Guys, it means that we can start to develop a really positive psychology around trading because we can trust the information on our screen. Interesting. Now, what did we do earlier today, guys? What did we do earlier today? Let's have a look. So the trade of the day, guys, the one that I put out on YouTube, is that little delta here. Now, that raises a great question. What are all these little stripes on the chart? So we have an indicator that's written, guys. It doesn't work to the interesting point. It's an indicator written for the futures markets. Full stop. It's a futures indicator. You can't take this and go, oh, but Lockie, I want to trade stocks. Can't trade stocks using a delta. The reason being, guys, is you've got to trade through a broker in order to get to the stock exchange to trade stocks. So we're brokerless. We don't use them. Now, the funny thing being, guys, each of these little green lines is a separate buy signal. Each of these little red ones is a sell signal. The one we picked on was that one there, even for the most junior traders. I'm going to make this a lot fatter, guys, so it becomes a lot more obvious for you. Okay, so as I make these candles fatter, as you can probably see, it just growing and growing and growing and becoming more obvious. The reason we picked on this little delta here, guys, is I said to everybody in the trading room this afternoon, if this candle turns mustard green, which you can see it's turned mustard green, that means it's a high volume, or what we call an extreme volume candle. Guys, what that means is the buyers are using too much steam pushing the market up, and everybody around the world is probably going to see that. So ultimately, what do we do as futures traders? Guys, we identify the team who is failing and we join the other team. All right, now this mustard green candle says to us, the buyers are failing to push the market up through a pivot. Guys, that's why the box is there. So failing to push through a pivot. So if you want the moment the market gets pushed back under that pivot, you can go short. Now, the reason I said short means, guys, for those that are brand new to trading, short means sell the market. Now, a number of our traders, guys, a number of our traders waited for the market to push up here above the pivot. And because they trust the pivot location so much, because this happens almost every day, they basically sat their sell signal, as they sat their sell signal right there underneath the pivot, right? So let me get rid of those other arrows. So what they did is they waited for the market to move up, fail at the pivot, turn around and come back down. And a number of our traders, guys, also said, well, if they can't buy through a pivot, the volume has gone to extreme volume, I'm going to start selling at these selling points, all these little red deltas on the way down, like delta, 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 delta. Guys, they're all institutional orders saying the banks are selling at this price, please join them. So what we did, guys, because I had a number of junior traders in the live trading room this afternoon, I said, we're going to target that delta right there. So what we're going to do is we're going to wait for the buyers to definitely fail at the pivot. What does that mean? What does that mean? We're going to wait for the candle to close, and then we're going to take a trade. Now, for those of you, guys, that have been in a series of webinars, I said quite a few times tonight, I think everybody's going to become either a ratio-based trader or an efficiency-based trader. Guys, this little red number down here basically says the buyers have lost control of the market by a factor of 2. So the buyers were in complete control of the market with this candle. On that candle, they completely lost control of the market. What does that mean? The market is highly likely to turn and sell back through the other way and go down. That's exactly why we took that particular trade. Now, Suzanne and Ray and a number of people in the webinar, now I know that you're into ratios. So Suzanne, if we have a look at the ratio of this green candle versus the big green one here, guys, what can everybody see? Can everybody see this is a very, very big green, powerful candle? That's when the NASDAQ broke into all-time untraded territory this afternoon. And then basically, if we compare the green, the mustard green to this big green here, would everybody agree that the buyers are running out of steam? Now, how do you determine that? Simply look at the size of the candle versus what they were achieving. And you basically say, you know what, you guys have completely lost control of the market. That is a static bar reversal short. So when I called this, guys, when I called this in the trading room today, I said to the traders, you've got 2 choices. You've got 2 choices. Okay. If you're going to sell the market because you've got the buyers, so this little spike, guys, this little spike here on the market says the buyers are pushed into the market and failed, your stop loss can sit above that candle. All right, so that black line is our stop loss. Your entry point is this little delta here. And I said to everybody, you've got 2 choices, guys. You can either go short to the next pivot, which is here, which is around about a 40 tick trade or $200 per contract, or you can try and hold the trade all the way down to the bottom of the jar. Now, ironically, guys, the bottom of the jar is all the way down here. Okay, now, mind you, some of the traders are still short. They're probably sitting short for hours and hours and hours and hours, which is okay. They're allowed to do that. But interesting point, guys, interesting point. This little box that I'll put back on the chart for you there, that's literally 40, what we call 40 ticks or $200. So if you went short on the trade that I called in the live trading room this afternoon, guys, and you went short for $200, you had significantly less than $200 at risk when you took the trade. Now, some people, as I said, went short all the way up here. And what I said to them is, if you're short from the R5, you can trade all the way down to the R4, which is what a number of them did. Guys, that ends up being around about 100 ticks. Let me just do the math for you. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I'm counting horizontals. It's 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 1, 2, 3, 4, 5. 25 times 4. Guys, it's almost 100 ticks or $500 per contract traded. Now, how long did it take to get paid? Guys, around about 20 minutes to get paid up to $500 if you reversed off the pivot, which raises a really important point. How do we know that we could reverse off the pivot? Great question. Why do my traders trust the pivots? Another great question. Guys, how do you develop a great psychology around trading? Guys, you focus on a trading system that already works. You focus on a trading system that uses pivots that are defined by the futures exchange, not pivots defined by a broker. Full stop. Now, interesting point. Guys, interesting point. Some of you, I have spoken about this before. So I'm going to ask everybody in the webinar, what is the magic number? What is the magic number for the NASDAQ? Now, some of you, oh, there we go, straight away, K, 133. Right. So if we wanted to work out, ladies and gents, if we wanted to work out how far this was going to go, we can use the most incredible thing called a Fibonacci extension. Now, one of the most accurate ways to use a Fibonacci extension as a 5-minute chart futures trader, okay, so let me be super clear, as one of the best ways to do that is grab a Fibonacci extension, just like this. You're going to run the Fibonacci down what we call your signal candle, and then we're going to run your Fibonacci back to the retracement. And what we're going to do is we're then going to go and have a look and see exactly where the NASDAQ went. So can everybody see the NASDAQ is actually sold down and it tagged the 133 perfectly before bouncing. Then it came back down and tested it, and eventually it crashed through down to the 161.8. Awesome. Turned around and went back the other way. Now, why do I mention that, guys? Why do I mention that? Because in every webinar we've spoken about, isn't it amazing, about the 133 fib extension. So if you took this trade today, which we called in the live trading room, and you literally just traded to the 133 fib extension and got out, you've made around $420 US per contract traded. What was your risk on the trade? About 140. After about 10 minutes, you had no risk on the trade. So question from Zimbabwe earlier, guys, you had no risk on the trade after about 10 minutes, and you had around about a $420 US profit target, guys, which is exactly, Jeff, you nailed it. So at the 100% mark, guys, at the 100% mark, if you want, the 100% extension is an incredible risk control point. So you can literally say, I'm going to control my risk at the 100. What does that mean? I'm going to lock in a little bit of profit. I can't lose any money on the trade. My risk, let's say you had $5 at risk, guys, to make 420. What does that mean? Your risk to reward is at least 80 times in your favor, at least 80 times in your favor. And you could have done exactly that, guys, exactly that. This trade was called in the live trading room this afternoon. That Fibonacci extension we've spoken about many, many, many times in these webinars. And we can also expect the sellers to sell down over 3 phases or get to 2 steps in a stumble. And let me show you guys what that looks like, which we did in one of our previous webinars. Guys, you go from the high point down to the low point, back to the high point, and then back down to the next extreme low point, which is all the way down there. So what did we actually get today on the NASDAQ? Guys, we literally got 2 steps and a stumble. The stumble is the sellers right here, that orange candle says the sellers are running out of steam. What does that mean? If the sellers are failing, we want to join the buyers and go back the other way. Guess what? The market agreed with us again. So on that note, I wanted to make sure I was 100% on time. Louis, very nice work, right? How are you? I hope you're brilliant, guys. One of the best traders, guys, I've ever met is literally in the webinar with us tonight. So a very, very, very warm welcome to young Louis, guys, doing an absolutely amazing job. Guys, the reversal trade we were talking about earlier, guys, it occurred live in the webinar. So live in the webinar, let me get rid of that extension. Have a look, guys. If you needed any proof whatsoever, guys, that futures trading off pivots is absolutely hilarious, have a look at this static bar reversal, guys, that's gone short. So you've got a static bar reversal short, guys, then you've got a 4-point turning bar, very close to a 4-point turning bar short. And guys, that's a live NASDAQ chart. nowhere to hide on that one. So the reversal that occurred inside our webinar is continuing to move down further and further and further and further into profit. Now, what I'd love to know from everybody, guys, what's the number one thing you've got out of the webinar tonight? Tonight was about introducing you to the concept of how to develop a great trading psychology. Guys, the fastest way to develop a great trading psychology is to take back-to-back winning trades. The fastest way to take back-to-back winning trades is become a futures trader. Once you become a futures trader, your pivots will be in the right spot. Once your pivots are in the right spot, you can write a strategy around reversing off those pivots because you know you can trust the price of the market. Guys and girls, if you can't trust the market you're trading, you will take back-to-back losing trades. You won't know why. You'll constantly search for the golden unicorn or the golden trading bullet. And at the end of the day, that's called futures trading. You don't want to sound boring. I'm kind of pretty boring, actually. So all in all, guys, for those that are into stats in the live trading room today, guys, we got 6 winning trades in a row, just depending on how you pull the market apart. Some people only got 2 or 3 trades. Guys, other traders just sat on the fence today because it was too volatile. But I do hope, guys, in the webinar tonight, you've seen why, guys, the live trading room started with 4 people. Started with 4 people in January. We're sitting at over 60 people now, which is kind of good fun. As the goal is to get that live trading room up around about 100 people. As then effectively, we will then start to build the prop trading team around that 100 people. Going to be very, very exciting. So, guys, look, I hope you got a lot of value out of the webinar. Again, thank you to the Trading Pit for allowing us to run these webinars, guys. On behalf of the Trading Pit, very excited to have such professional, lovely partners working with us. Oh, here's the big boss. Guys, don't say anything.
You are the big boss. You are the big boss. Thank you very much, Lucky. Wherever we are always enjoying to attend to your webinars.
Oh, that's brilliant. So, guys, look, have a great night. I hope you've learned lots. And, guys, we'll get this up on YouTube and we'll make sure that you can watch it over and over and over again. And there's a lot of really great lessons. So, mate, thank you for having us. Appreciate it.
Thank you. Thank you, everybody. Bye.
Okay, bye-bye, guys. Bye.